Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, in the hot seat today is Director and Chief Executive Officer of DFCC Bank, Lakshman Silva, as we continue to explore Sri Lanka's banking sector. The LMD Nielsen Business Confidence Index shed 7 basis points in July. Nielsen's Director of Consumer Insights, Terika Miyanadeniya, analyzes the dip in business confidence. And in our final segment, Trisha Parish, the Product Head Economic Research of Frontier Research, provides some insights into Sri Lanka's macro outlook. That's the lineup for Benchmark.
Hello and welcome to Benchmark, the Big Picture Business Program. I'm Savitri Rodrigo. We are continuing our discussion on the banking sector, and today we've invited the CEO of DFCC, Lakshman Silva, to join us on the program. Now, ahead on the program, we'll be tackling some issues. Primarily, the planned adoption of flexible inflation targeting, the digital transformation of the banking sector, and also the proposed amendments to the Monetary Law Act, among other issues. Lakshman, welcome to Benchmark. Thank you for joining us today. Just as a precursor, could you just tell me how you see the banking sector the way it is right now?
Banking sector for this year has seen many turbulences times actually. In terms of transforming the banking into new accounting standards, IFRS, and meeting the Basel III requirements was a challenge in 2017 and 2018, and banks has to make some of the banks had to make huge provisions which depressed their profitability during the last 2 years, and we were just coming out of that, and banking staff were getting used to the way of working under the new regimes of accounting and other regulations. And with all that, so we were looking forward for a very good year, 2019. But with these unfortunate incidents that happened around the country between April and May, during that period, I think the situation had got slightly changed. The banking customers also had many difficulties. Different segments, sectors have got affected by those situations. So there are a lot of challenges actually the banks are facing right at the moment. The second quarter results are yet to be seen in the next few days, that we might see those, but the information that we get from the colleagues in the banking sector is that they are all having a little tough time in the first 6 months of this year. But there are positives that we see in the month of July. The import trades have gone up slightly. Banking transactions have come to normalcy. Some of the sectors which were got affected in the past due to these incidents have now got actually normalized, especially the tourism sector, which had a very gloomy picture during the first 2 months after April, had seen some kind of positive arrivals, number of people coming into hotels, then also the city hotels are being patronized by the Sri Lankans, many. So seems things are going on the correct direction. So I would expect the first 2 quarters of banking sector to be little depressed. But having said that, with the aggression the banks are taking, because we have to provide return on investment, return on equity to the investors, I believe that coming 2 weeks will be somewhat better.
So the central bank has been calling for or announced that it would adopt flexible inflation targeting into its monetary policy framework by 2020 to maintain a single-digit inflation over 10 years. Now, what is your take on this planned adoption?
Actually, in terms of monetary policy, central bank have introduced many new initiatives, and one of these initiatives is the inflationary regime, what they are talking about. In terms of a country, when you are really looking at what are the fundamentals we look at is the GDP growth, the inflation. on the basis of GDP and inflation only, even our plans, business plans, projections are made. So it is always nice to have controlled inflation that is beneficial for the consumers in general, plus the institutions like us when we are making our plans for the next years as well. I think central bank is targeting that to get to a single digit level. Already the inflation is on single digit. So the controlling mechanisms will come on board by about 2020. I think the central bank governor is very confident that they are working within the broad regime, the broad lines that they have worked on that. So money supply, all those things are being managed by the central bank. So we have seen a continuous, consistent inflation targets achieved by the government Sri Lanka over the last couple of quarters. But to be successful, my belief is that the central bank alone can't do that. Okay, so central bank is an independent organization, and the government of Sri Lanka also need to join hand with central bank in setting those targets, and not to disrupt those plans that the central bank are having, because in one hand, if the central bank is trying to manage the inflation, and the other hand, if there are liberal changes happening into the society in terms of salary increases or in terms of various other perks and privileges to be provided to various segments in the market, then of course it is beyond the central bank's control, which will actually have a serious impact to the inflation readjustment. So
there has been a concerted effort among the banking sector for digitalization, but according to Asia Money, it is somewhat challenging to get customers to move away from the slips of paper and the over-the-counter service, and also one of the other challenges that Asia Money has pronounced is that there are antiquated regulations that are a hindrance to the growth of innovative banking. Now, as banks take on this digital transformation, what measures do you think the banking sector needs to take to ensure that digitalization goes on as planned?
You are partly true that the digitalization cannot be in one hand. It's not an initiative only the banks can take. The economic cycles in the country should change. In addition to that, now the main challenge that we are having of getting customers on board on a digital methodology is the inability or in absence of a digitalized identity card in Sri Lanka. Now, for that matter, now we have been having this traditional identity cards, even the licenses are in that different form. Now, if the digitalization to come into full force, I believe that all the other required facilities should be available in the country. And as you correctly mentioned, Sri Lanka is slow to embrace into the digital banking, if I look at finance sector. But we have been talking a lot about how to get this digital identification being done. I am impressed how India with Aadhaar, where they have actually with a larger population over 1 billion have started that process and going smoothly. And as a result, although in India unbanked areas have still not got captured, but the urban areas have got converted into digital. And we see how digital banking is taking off in India. In Sri Lanka, with a smaller population of about 20 million plus, I think we should be able to do that faster than India, and also the banks are geared to do that also. So I believe the government also had to take a policy decision, and once they take that policy decision to computerize or implement this digital identity form, I think that will enable the banks to quickly get into the digital banking sphere.
So there's been a lot of rhetoric about financial inclusion. How would you rate Sri Lanka's process in actually achieving financial inclusion?
I would say that Sri Lanka financial inclusion, comparatively to similar countries like Sri Lanka in the world, we have done better. But lot more can be done because of lack of our presence of banking regulatory banks in areas in the rural areas. there have been several mishaps in the past where, unauthorized financial takers have gone, and these people have lent to the clients, they have borrowed from those clients. As a result, actually some of those rural communities have actually got affected through those kind of transactions. We have seen many instances where clients have lost their money either through deposits being made to unauthorized organizations, and also borrowing at very exorbitant rates. They have fell into trouble. So in Sri Lanka in general, when I was the president of the Institute of Sri Lanka Association of Professional Bankers, I came out with this theory of financial inclusion, and we all learned a lot from the other countries, and I think banks have taken a lot of initiatives. So there's a lot of literacy, financial literacy had to be transformed, given to these clients, educate them what banking transactions are. They are used to keep the money that they collect at home, so we need to provide their education and to provide affiliated services. So I think banks have to do a lot to make the people aware banking is a unique proposition for them, and they have benefits what they can derive through banking sector more than what they have earned earlier. So I think financial inclusion is something that Sri Lanka should embrace. I think it's progressing, but it can be done better.
So we will continue this discussion after a commercial break. Time for a commercial break, and on the other side, Lakshman Silva elaborates on how banks can help leverage the full potential of SMEs, and also discusses the barriers to consolidation in the financial services industry. Do stay with us.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal. LMD podcast now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
$8,500 done. 1,500 to go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Here with Benchmark, and we are discussing the banking sector with the CEO of DFCC Bank, Lakshman Silva. Lakshman, just getting back to some of the discussions we've been having, what are the emerging opportunities you see for the banking sector?
If you really look at banking sector, we talked about the financial inclusion. In addition to that, the emerging opportunities like at DFCC, we ran as a development bank separately. We ran a commercial bank separately, and we merged together. Now we are a fully fledged commercial bank. If you are going through the digital process, I think some of the IT initiatives that should come in to make easy for all customers is a paramount important thing. Although I must tell you frankly, according to the present regulations, banks are restricted of going out of beyond banking transactions. I believe I think they have learned a lot of lessons from the Western world, also investment banking. When you look at various other merchant banking activities, we are a successful organization who runs a private-public partnership and an industrial estate. Even that, according to the Banking Act, that we are unable to continue with that kind of thing. So I think if you really look at those restrictions, prevent us of expanding our horizons. In Sri Lanka, the opportunities are slightly different due to the number of the population in Sri Lanka, the areas that is available. But I think whatever the opportunity that we get to enhance our banking footprint, get more customers, retail or wholesale, is something that we are looking at.
So the SME sector has been highlighted as a significant contributor to GDP, not to mention the employment that it gives. How can banks actually help leverage on the full potential of SMEs?
There are chambers of commerce of SME. But I think the basic problem the SMEs are facing right at the moment is that they don't have the vertical integration possibility. Either they are producers or either they are suppliers. And there are no value chain propositions being offered to these people. Even for, if you really look at the agriculture segment of the SMEs, they don't have processing centers, they don't have storage capacities. So their scale of operations are very limited. And in addition to that, the failures that we have seen in SME are due to indiscipline. There is a lack of financial literacy provided to them, guidance, directions provided to them, assistance. So I think we as banks, while providing financial assistance to SME sector, also required to be little empathetic about those people. We too take a lot of trouble there. We run a program called Sahaya Hamo, DFCC Sahaya Hamo, that is directed with the assistance of Central Bank of Sri Lanka and other professionals. We try to educate these young SME entrepreneurs to see how they could structure a business, what financial assistance they should take from a bank, how to maintain their financial statements, and how can they expand their business operations. So through that kind of processes, we try to improve the knowledge of the SMEs. Government authorities like the Industrial Development Board, Industry Ministry, there are so many agencies, vocational training units. I think there are actions, initiatives that have been taken by these institutions and organizations independently without cohesing all those together and providing one complete solution to these people.
The central bank has been promoting consolidation for several years. What do you see as barriers to this consolidation process?
The willingness is a barrier. When I say willingness, it's not only the shareholders, it's the employees, the stakeholders. Everybody has to be convinced that the consolidations will bring better results. In Sri Lanka, if you really look at the unbanked population is greater, but that situation had got changed over the last 10 years. Previously, most of the banks were only located in urban and suburbs. But rural areas, the banks are not there. Now, of course, the situation have got changed. Having said that, all banks are doing the same thing over and over again. When it comes to customers, we offer the same services to customers. With the new regulations, the anti-money laundering, compliances, with all those regulations that are coming in, new banking act, banks need to automate the whole processes. They need to have securities for their IT solutions. They have to have various other investments have to be made. Now, when you really, as an independent organization, when you really look at the investment that we have to make for compliances and various other things, it clearly justifies of a consolidation. Or at least if the banks are not consolidated, these services to be consolidated and brought in under a single regulation. Lanka Pay in Sri Lanka, payment and settlement systems are common. So that is a lot of problems from us. So similarly, Lanka Financial Services Bureau is another thing. So I think either whatever the form, it can be physical consolidation of banks or physical consolidation of services has become a necessity. So when you look at the barriers, willingness is one. Second issue is the regulations, because if you really look at even a consolidation in Sri Lanka, how customers would view, how the documentation, legal aspects will look at it. There are long barriers to consolidate when it comes to the legal terms. And also, if a consolidation to be successful, then there is an optimization of labor. In Sri Lanka, retrenching staff in case of a bigger consolidation is an issue in Sri Lanka. So unless those regulations, laws and the acceptance of the public is not there, how can bank consolidation happen? So these are barriers I can see, of course.
The World Bank recently upgraded Sri Lanka from its lower middle income classification based on our GNI of $4,060. Now, what are the implications of Sri Lanka actually becoming an upper middle income country?
In fact, we were skeptical about it, and we thought that it would make a big difference to the country, you know, when you get into the upper grade. Of course, to be successful in that, then all the other fundamentals also has to happen. Now, when we are in the upper quadrant of the income level, then of course you can't have a country which has a GDP of 3%. Now, if you continue to have a GDP of 3% and about 5% or 4% of inflation, where are we going to end up actually continuously to perform? So I think to be successful, it's good that we are there, but then GDP, the economic growth, other fundamentals has to also come in line with that. In addition to that, if you really look at Sri Lanka current situation, although the real factor economy conditions are seen properly, but we see lots of distressed other entities, which are other segments which are actually carrying the burden. Some of the SOEs, policy decisions have not been properly taken. As a result, there's a lot of leakage that is happening from the economy to those SOEs. We need, as a government, need to take a decision whether these SOEs are there. Are we going in a different direction and do that? So that need to be done. But the major hindrances we see is that I feel that we are neither in the lower bracket or in the upper bracket because of the income levels that we have gone into the other brackets. As a result, we have missed a lot of other opportunities. Say now, as a bank, we used to get lots of credit line on a concessionary terms when we are in the lower bracket. But when we have shifted into the upper bracket, we lose all those concessions. So when those concessions are not offered to us, then we don't have the opportunity to lend to the customers at a concession rate. We had to find our own resources to lend to the customers, which are really costly. Those market conditions have to prevail. But lending will happen at the market condition, but the rest of the things are not happening at the market condition. So how would you manage that? That's the challenge.
Thank you so much, Lakshman, for joining us today. It's been a very interesting dialogue.
Thank you very much.
So that was the CEO of DFCC Bank, Lakshman Silva, talking to us about the banking industry and the implications, the challenges that the sector would be facing also in the coming year. And on the other side, we have Anushan Selvaraja with more.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal. LMD podcast now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
$8,500 done. 1,500 go. Hoorah!
What on earth are you doing?
I'm making money.
You're crazy.
Crazy for money. 10,000 steps done. Who the man? I do it every single day. Show me the money.
So you run 10,000 steps every day, huh? You must be fit.
Some days I do 20,000. Hoorah!
Welcome back to Benchmark. I'm Anushan Silva. Now we're going to take a look at the latest on the Business Confidence Index. And joining me is Director of Consumer Insights from Nielsen, Terika Mianadenia. Welcome to the show, Terika. Now, how has the BCI performed as of late?
Well, Anushan, it looks as if, the events that happened in April have still not yet been forgotten by the consumers as well as the business community. Even though the government did curb that situation, and there's a feeling that nothing much has happened since then. And also, the elections are around the corner, and there's a bit of uncertainty around that situation as well. So as a result, what has happened is now the BCI shot up last June to 81, but it has come down again to 74. So, and also the consumer confidence has not picked up. It's still at 36, which is an all-time low. So basically, there is not much confidence in both the business as well as the consumers with regard to what is happening right now.
How do respondents view the economy in the short and the long term?
Now, if you look at the macroeconomics, right? So the GDP grew by about 3.7%. Then year-on-year inflation still stands below 4%. And also the exports grew by about 4%, and imports, there's a minus degrowth, about minus 4%. So the macroeconomics are very lucrative for business growth. But apparently the consumers as well as the businesses have other concerns about the security, about the taxes, about the political arena. So now compared to May and June, April and May, there is a slight increase in businesses leaders feeling that the economy will improve. So about 12% feel that the economy will improve, and 1 in 4, about 27% feel that their businesses will also improve. But it's still short because only about the short-term sentiments expected on businesses are still muted around. Only about 1 in 5 leaders feel that the next month will show business improvement. So therefore, they are still a little bit muted. It's almost as if they are wait and see. Because, of course, the elections, it's very uncertain who is going to come. So therefore, they are still waiting to see what is going to happen before they actually, comment on these things.
Where do the perceptions lie in terms of investments?
The elections are just around the corner. The candidates have not yet been announced, right? So there's a bit of uncertainty because right now, if you realize what was happening after the April and the April period, there was a lot of bitterness among the business community as well as the consumers. So they were saying they were almost not very happy with how the government actually looked at the situation and came up with all the solutions. So therefore, now they are waiting to see who is going to come up. So there is a bit of uncertainty. So about 80% of the businesses are not likely to actually improve or likely to improve their businesses. They are keeping their workforce as it is and waiting to see what is going to happen. So therefore, I don't see any improvements in terms of businesses happening in the next few months.
Thank you very much for joining us, Terika.
Thank you, Anvishan.
That was Director of Consumer Insights from Nielsen, Terika Meenadenia. We'll be right back after a short commercial break. Stay tuned.
LMD is making waves, airwaves. The next big thing from Sri Lanka's pioneering business journal, LMD Podcast, now online. Listen to our articles on the go at www.lmd.lk. Select, play, listen. It's that simple.
Welcome back to the show. I'm Lakshman Silva. Now we take a look at the economy, and joining me is Trisha Pires, the product head for economic research from Frontier Research. Welcome to the show, Trisha. Now, the central bank recently cut its policy rates. Now, what was the rationale behind this?
Okay. So, since the start of this year, treasury bill rates have been falling. So, they introduced a couple of SRR cuts that we saw in November as well as February of this year to inject liquidity and saw these rates coming off. But market deposit and lending rates weren't really coming off. So, this was mainly one of the reasons for the central bank to really introduce this deposit rate cap as well as the policy rate cut which we saw in May. Of course, a lot of it was to stimulate growth as well, coming off a very low growth year last year, and of course the impact of the Easter Sunday attacks on this year to dampen the growth prospects really accelerated probably the process of them continuing with an easing monetary policy stance.
Trisha, what are the global factors which could have contributed to this decision?
So, global concerns was of course one of the major factors, and it was highlighted by the central bank as well. Global growth being the main concern. So of course in the US as well, with the US-China trade war conditions really not dying off, there's a lot of prospects of global growth slowing down. So a lot of the major central banks, US, Europe, England, Japan, most of them are on sort of an easing monetary policy stance at the moment. And this is quite different to what we were seeing last year. So last year the Fed was really on a tightening stance the last couple of years. And they've taken a change in tone. In fact, just this week, in the July FOMC statement, they had cut their rates for the first time in the last couple of years. Of course, they've worded it as like a mid-cycle adjustment rather than getting into a rates cutting cycle. But it overall shows that there could be a weakness in the dollar, which is of course favorable for countries like Sri Lanka and gives us the breathing space to really cut rates, even if our real interest rates drop, that we wouldn't see a big impact in terms of foreign flows.
How do you see monetary policy shaping up moving forward?
So in the future, we could see the CBSL continuing on an easing monetary policy stance, but of course, we might not see it in terms of action very quickly. So of course, they're putting a lot of pressure on banks. They're talking about lending rate cap that could come in as well. But the governor has been very cautious. So he's really taking into account the fact that we could see a little bit more fiscal stimulus that could come from spending ahead of the elections. He's talked about the Gamperlia program, things like that, that could boost the economy. So it might not be needed to see rate cuts in terms of the monetary policy side as well. So he's really taking into account all of this. He's also mentioned that he's watching global markets quite closely because it's very easy to really turn quite quickly. So he doesn't want to act too hastily. So he might talk about more easing, but the action of it might come a little bit later.
Thank you very much for joining us, Trisha.
Thank you.
That was Product Head for Economic Research from Frontier Research, Trisha Pires. Thank you for watching Benchmark, and we hope to see you again next time.